Hello and welcome to Tax Matters. I am Chamaka Ohauchi.
And I am Pearl Naimeka. The FIRS continues to receive commendation from different directions, even from among its peers. On Thursday, the 5th of September 2019, members of Revenue Mobilization, Allocation and Fiscal Commission, led by its chairman, Engineer Elias Mbam, came calling at Revenue House in Abuja. Prominent among the RAMFAC commissioners is Alhaji Kabiru Mashi, one-time acting executive chairman FIRS. In welcoming his guests, Executive Chairman FIRS, Mr. Babatunde Fowler, shared the experience of the service with the Commission.
We have had two tax amnesties, one in 2016, followed very closely by VADES. And what we did notice is that over 40% of unremitted taxes happen to be VAT. Money is collected from consumers, but not remitted to government. And these amounts accounted for close to 45 billion in each case. So they're not amounts that one can overlook. We've also taken it a step further in getting information from stakeholders, especially the banking sector. We looked at all accounts initially that had annual banking turnover of 1 billion and above annually. And also, we went down to 100 million banking turnover annually and that don't have tax IDs. Or if they have tax IDs, they haven't had any significant impact in terms of the payment of taxes. We have met with these stakeholders a number of times, and 2.5 to 3 months ago, to be precise, we have put a lien on 40,000 of those accounts that still refuse to come forward. 3,000 of those accounts have paid about 82 billion naira in the last 70 days. I would believe by the time we finish the exercise of going through the other 40,000, that should bring some substantive revenue to government coffers. We do know that you did engage the banking sector, where you're able to find some substantial amount of money that should not be remitted. And I think that is part of your mandate, and we appreciate it. And I believe that other government agencies that you partner with also appreciate your contribution. And I think that that exercise showed taxpayers that they can run, but they can't hide. And that this government is one. That if you escape the FIRS, you will not escape RAMFAC.
We do recall that some time ago, some stakeholders, particularly the banks, did complain about what they described as multiple agencies chasing them with regards to taxation and tax compliance. RAMFAC was particularly fingered for carrying out examination of the books of banks with a view to ascertaining their compliance with their responsibility of collecting and remitting taxes. The banks wondered what RAMFAC had to do with taxation. Engineer Elias Mbam weighed in on this and clarified issues.
Mr. Chairman, one of our primary responsibilities is to mobilize revenue and also to minimize leakage. And why we get involved with monitoring is to ensure that no revenue leakage is observed. In 2012 or thereabout, we started to look at records of remittances. We are not involved in assessment or collection of taxes, but to monitor the remittances. How much was paid to the bank? How much did they remit to the Federation account? That is where our job starts and ends. And I must tell you that it yielded a lot of results. In the last exercise we did, we got over 70 billion from that exercise. We intend to continue because it's our primary responsibility. And we thank you for all the support you have given to us in that respect.
The RAMFAC chairman spoke further on the collaboration between RAMFAC and the FIRS.
One of our major stakeholders is FIRS. I want to observe with pleasure, and in the last 3 months, FIRS is a major contributor to the revenue of the Federation account. The average contribution in the last 3 months is about 59.7%. So in other words, more than half of the revenue shared to the 3 tiers of government comes from FIRS. So I thank you for that effort. I recall that sometime we worked together to recover withholding taxes at states and local governments. We are still ready to work with you. I believe we are all serving the same government, and our work is collaborative.
The Federal Inland Revenue Service FIRS calls on all corporate organizations operating in Nigeria to register for the purpose of payment of taxes and obtain a tax identification number TIN. All registered companies must obtain a tax identification number immediately from the nearest FIRS office. You can also collect and return tax registration forms from the Federal Inland Revenue Service Engagement and Enlightenment Tax Teams (FEET) on compliance checks exercise in your area. A company which is yet to commence business after at least 6 months of incorporation must pay a pre-operational levy of 20,000 naira in the first year and 25,000 naira for subsequent years to obtain its tax clearance certificate (TCC). Note that filing and payment of VAT and withholding tax returns must be done on or before the 21st day of every month. Register for VAT. File all tax returns as and at when due. Be a responsible corporate citizen of Nigeria. It pays to pay your tax. This message is from the Federal Inland Revenue Service.
Welcome back. It is generally agreed that taxation rests on a tripod: tax policy, tax legislation, and tax administration. Tax policy is the very foundation on which the other 2 legs rest because, of course, before laws are passed, there must be a focus, and that focus translates into a policy. A new tax policy for Nigeria was approved in 2017. Upon the approval of this revised national tax policy, the government immediately constituted an implementation committee made up of members of the review committee along with a few members from the public and private sectors. That committee immediately set out to work, and as we understand, a lot of progress was made. But then, in its wisdom, government has reconstituted the implementation committee with the executive chairman FIRS, Chairman Joint Tax Board, Mr. Babatunde Fowler, as the chairman.
The NTPIC is a broad-based body that cuts across the public and private sectors, while also co-opting advisors and experts from multilateral organizations. The NTPIC held its inaugural meeting on the 23rd of July 2019. In his opening address, Mr. Fowler gave a background to the committee's work.
In May 2018, the then Minister of Finance, Mrs. Kemi Adoshu, submitted a memorandum to the Federal Executive Council seeking approval for the National Tax Policy Implementation Committee report on tax laws and reforms. At that time, the NTPIC was chaired by a director at the Federal Ministry of Finance, and we had undertaken a review of extant tax laws with a view to reforming our tax code, also increasing government revenue, simplifying the process for the assessment and payment of taxes, supporting the ease of doing business reforms, and protecting the most vulnerable persons in our society. The Minister's memo also sought for Cabinet's approval for the following: 2 distinct executive orders, namely the VAT modernization order and the review of goods liable to excise duties and applicable rate order on what some people like to call sin tax. 5 separate tax amendment bills covering companies' income tax, personal income tax, value-added tax, the Industrial Development Income Tax Relief Act, and customs, exercises and tariffs, as well as amendments to the Stamp Duties Act and the associated Gas Reinjection Act. On the 6th of June 2018, the Cabinet granted provisional approval to these tax amendments, subject, however, to further clearance from the Federal Ministries of Petroleum and Justice that the aforementioned amendments did not contradict the provisions of existing laws. Furthermore, the Cabinet directed the Honorable Attorney General of the Federation and Minister of Justice to prepare the relevant draft legislation for Mr. President's consideration and approval prior to onward transmission to the National Assembly for enactment into law. And we had hoped that that would have been done in the 8th Assembly.
The NTPIC is supported in its work by a technical tax policy drafting committee.
I'm charging the chairman and members of this technical committee with the responsibility of accelerating the drafting and submission of a draft finance bill, and if deemed necessary, any draft executive orders, as some of the changes or amendments can be done through executive order by the President. It is also our expectation that the technical committee will work over the next few weeks to produce a singular set of fiscal measures that will be considered and approved by the reconstituted NTPIC. Once agreed, these fiscal measures are to be submitted to the Economic Management Team and the Federal Executive Council for approval and ultimate transmission to the 9th Assembly for passage into law as part of the efforts to support the 2020 executive budget proposal. It is also the intention of this government that on an annual basis, as the need arises, to submit finance bills at the same time that the budget is being considered for passage.
The technical committee will be convening immediately after this inaugural meeting with a stakeholders workshop with members of the Capital Market Master Plan Implementation Committee. The focus of the workshop will be to consider tax proposals for capital market reforms for the securities lending transactions and real estate investment trusts that have been under consideration by the Federal Ministry of Finance, Federal Ministry of Justice, the FIRS, and the Securities and Exchange Commission.
The NTPIC has since held its second meeting, once again in Abuja, on the 3rd of September 2019. Again, the committee chairman, the executive chairman, FIRS, presided. Chairman Technical Committee of the NTPIC, Dr. Dikwaolu, once again shed more light on the work of the technical committee.
We've held 4 meetings of the technical committee thus far, but we have not yet completed our work, and we will continue after this meeting, bearing in mind that we need to move quickly. And the reasons why we need to move quickly, of course, have to do with the fact that we want the outcome of our work to be available to the federal government as soon as possible, and certainly not later than the submission of the draft appropriation bill. We have focused in doing our work, and you will hear a bit more of the detail later, on keeping our minds on how to improve non-oil revenues to government. At the same time, we are bearing in mind that we have to signal through improvements in the tax system our efforts to improve the business environment. And in both instances, bearing in mind the principles that have informed the national tax policy around equity, around efficiency, and such like. So what we have done is to have 2 major strands of work. The first strand of work is to look for the issues that can be easily addressed and need to be speedily addressed, that can go into a draft finance bill for consideration by government. And we have also looked at the more medium-term to long-term issues that need to be captured in a policy note which would guide activities going forward.
Dr. Bode Oyetunde of the Presidency also shed more light on the work of the NTPIC.
This event that we're hosting just behind us is the second meeting of the National Tax Policy Implementation Committee. So at the end of May 2019, the Minister of Finance, now the Minister of Finance, Budget and National Planning, we constituted a National Tax Policy Committee. And that committee is chaired by the executive chairman of the FRS as the chairman, and the Controller General of Customs as the deputy chairman. It comprises various director generals and executive secretaries of various government agencies, including the National Bureau of Statistics, the NIPC, that deals with investment promotion, the Debt Management Office, and other agencies under the whole economic management team remit. Now, essentially what we're looking at is reviewing our tax and our fiscal laws and seeing how we can go back to the process where in the past, under the military, every year when the budget goes to National Assembly, the Appropriation Act and the budget details are also accompanied by a finance bill that highlights some key fiscal measures to support the budget, given the challenges the federal government has been dealing with in terms of revenue generation, and also need to carry along taxpayers and other customers. The idea is to come up with this finance bill and a policy note that will be shared with the members of the public by the Minister of Finance in a consultative process. Ultimately, once the proposals in the finance bill and the policy note have been concluded, they will accompany the budget as it goes to the Federal Executive Council, the Economic Management Team, and ultimately the National Assembly. And then the finance bill will be passed into law, just as the appropriations bill is passed into law, to support the 2020 budget. The idea is going forward, this will be an annual exercise and the committee will be a standing one, so that as we make changes to our tax laws and our fiscal laws, we can carry the public along, but we can also ensure that the federal government is able to create the revenues that we require to drive our development and economic and social development objectives under the Economic Recovery and Growth Plan of the federal government and particularly the President Muhammadu Buhari administration.
When do we expect this finance bill?
The finance bill ultimately is going to be the National Assembly's responsibility. Towards September, October, the President is going to take to National Assembly the Appropriation Act and the Budget Bill. The idea is he may also take a finance bill to accompany them and support the budget. He will lay before the National Assembly the Budget Bill, the Appropriation Act, and the Finance Bill. And the idea is as National Assembly receive and consider the Finance Bill as well as the Appropriation Act, sometime early next year, it will be passed into law by National Assembly and assented to by the President, along with the Appropriation Act for the 2020 budget.
It's a new dawn. Meticulous planning, deliberate implementation.
Bye-bye to 10-10-year tax law review. Welcome to the golden age where every year what needs to be done is done.
Now we can be assured that the tax laws will keep pace with developments in Nigeria and beyond Nigeria. You are still on to tax matters, and another matter that is trending is the matter of the placement of lien on the bank accounts of alleged tax defaulters. At the just concluded annual conference of the Institute of Chartered Accountants of Nigeria, ICAN, held in Abuja from Monday the 9th to Friday the 13th of September 2019, the matter was the crux of the presentation of the Executive Chairman FRS, Mr. Babatunde Fowler.
Before substitution, we first of all had the tax amnesty, which was between the 5th of October and 24th of November 2016. This was to give all taxpayers, both within the tax nets and outside the tax nets, to come forward between the years of 2013 to 2015, for which we offered a complete waiver of interest and penalty. This was followed very closely by VADES. But thereafter, we still notice that quite a large number of taxpayers still did not come forward. I'm sure all of you do know the powers of the FIRS from the Establishment Act. After granting and giving 2 tax amnesties, to find out that a lot of people still had not come forward. Now, what does the FIRS Establishment Act say? The service may by notice in writing appoint any person to be the agent of a taxable person if the circumstances provide in subsection 2 of this section make it expedient to do so. The agent appointed under subsection 1 of this section may be required to pay any tax payable by the taxable person from any money which may be held by the agent of the taxable person. That is the key point there. If you are appointed as an agent and you do have funds and there's a tax liability, you may be required to pay on behalf of that defaulting taxpayer. Let's look at whether FIRS can substitute without notice to taxpayers. If you look at, by the combined reading of Section 81G, Section 31 of the FIRS Establishment Act, and Section 55 of CITA, the FIRS does not require additional notice to a taxpayer before exercising its right of substitution. Now, we do not necessarily follow through with that. We do advise, we do notify, we do have stakeholder engagements to even let them know what we're doing. If you look at the chart here, in terms of non-compliant businesses, we had over 44,293 non-compliant companies. Now, these are companies that had annual banking turnover of 100 million and above, some with no tax ID, some with a tax ID, but no payment. We have had discussions with 3,900, less than 10% of these, and those 10% have already paid 97.7 billion naira. You can imagine the amount of money still outstanding from businesses operating within this economy, within this society, making income and profits, and yet not willing to support the same society in which they live. Now, we looked at the banking turnover for even companies that had 1 billion naira and above, for which we had close to 3,000. We had 2,980 of these accounts. We've had agreements with just 594, and they paid 41 billion. For those between 100 million and 1 billion, we've had discussions with 3,203 out of 34,000, and they paid 47 billion.
Mrs. Ifweko Omogui Okaro was the chairman of the paper presentation session. Mr. Fowler's paper was discussed by two other members of the panel.
When I read section 31 of the FRS Act, which the chairman also read, the key phrase we need to interpret there is, when is a tax payable by the taxable person? Okay, I acknowledge the point made by the chairman that government gave opportunities twice to taxpayers and some defaulters just didn't come forward to pay. But really that is not enough for the invocation of the power of substitution under this section. A tax-specific amount must be due and payable. And that is why the letter written to the bank must be specific as to that established liability. As a matter of fact, no bank will legally be acting in compliance with this provision without actually verifying that the liability has been established, it is final and conclusive, and it is not contested by the bank customer. If FRS wants to use that provision, a power substitution, to go after either those who are not registered for taxes or those who register who are not paying taxes, they actually have to amend that provision, because that provision can only be used when a liability has been established.
I'm not here in totality to condemn the powers of the FIRS in doing that, but I think what we are saying is, one, observe due process, in the sense that, one, let the preconditions that ought to take place before you do the needful, which is, one, issue the assessment and bring it to the notification of the taxpayer. And then I'm not sure, and I mean, these cases are yet to be tested. In practice, we'd like to negotiate and sit down. So what we see is that when we do get those letters, we write, because the law also says that the notice itself that has been issued to the collecting agent will be treated as a notice of assessment. So you can have your right to object to it, and you can have your right to challenge it. So we normally would advise, okay, challenge it. And when we do that, we see that, of course, audience is granted, and most instances, perhaps the freeze is lifted.
Mr. Fowler responded to the points raised by the paper discussants.
In a bid to clarify or find out the status of the business owner who is not known to the tax authorities, we spoke to Mr. Wole Obayomi, one of the discussants.
All these will come to you in a subsequent episode of Tax Matters. See you next week.